Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Samit, welcome to the Investor Hour. Delighted to have you. I know we've tried to get you to our conferences in the past and tried to get you on the podcast. I'm so glad we are finally doing this. Delighted.
It's my absolute pleasure. Thank you.
Wonderful. This is going to be our first discussion on the podcast with a stock picker like yourself, who's not based out of Bombay.
Okay.
Financial capital, everyone's here, but I'm sure there is a reason why you're in Pune. And I think a lot of that filters down to your performance, where the noise is kept out and you're doing your stuff. We'll talk about that in a bit. But to kick this off, tell me a little bit about yourself. I did see your LinkedIn page, and I could see that there were, I think you had initially you did a lot of things that were not really correlated. And at some point you moved in this. So I wanted to start by literally telling me where you grew up, what was the environment in your household about investing, and then from there we'll take it to your job and how it proceeded.
Yes. See, in this aspect, I think my background, my environment probably is going to be very different than any other probably fund manager or investor, especially in Mumbai. So I'm not too far away from Mumbai. It's about 100 kilometers, north of there. But it's a small village called Mahim, and it's a beach town. So, I grew up there. And there was only one school in the entire town, right, which was a Marathi medium school, right? And my parents, they were not well educated. I mean, they had done about, I think, until the metric at that point, but they still wanted us to go into English medium school because, English was always sort of a sense of insecurity that no one was able to speak. And so they sent us to English medium school. But it was extremely poor quality school because it was like, one of the first time, even the teachers there couldn't really speak much of English, but, they tried to cover the portion. So my school was about 8 kilometers away. So we used to take the state transport, early in the morning, 6 o'clock, we used to walk to the bus stop, which was probably half a kilometer away, and then come to a town called Palghar, and do the schooling and then come back in the evening. So that was our daily routine. And once you come back, then, most of our friends around, we used to live in that village town where all the Vartaks used to live, so mostly my, ancestors and their sort of, so all of them were all cousins, right? So our daily routine was once we come back from school, we used to just go out, go in the farm, play something, either some cricket. We used to go to the beach, do whatever sport we could do. And it was all fun. It was, there was no real pressure of, studies, or I need to do some other activity. I need to learn music. I need to learn some other skills. It was completely free. And, so it was real fun. My father used to go to the farm. Our farm from the house was about, a couple of kilometers away. So he used to come in the evening. And once he comes back, then, he used to force us to, okay, I need to study. But it was, I think, one of the most enjoyable times. As a farmer, my father never really, made much of money because you don't, right? Even though we were, few of the larger farmers out there, but it was very difficult to make much money because you always had to put up the investment in upfront. And either there were some issues with the monsoon or some pest, and it used to kill crops multiple times, so it was always a struggle. My father always had, debt on his head all his life. And our fees was very, minimal, like, 4 rupees or 5 rupees a month, even though it was an English medium school. And even that, we had to sometimes delay the payment for 3-4 months, those kind of things. So in terms of equity, I probably never even dreamt of something called equity. My father probably even had never heard of something called a share. So until I went to the US, that was in 1997, I had no idea what an equity meant. I had zero idea. So that was, sort of my initial years uh, of equity investment, which was absolute zero.
What did you guys grow on that farm of yours?
So see, it's a beach, sort of coastal, Konkan belt, right? So most of it is. So my grandfather used to be the sarpanch of our town, and he was very sort of entrepreneurial. And at that time, our town was known for beetle leaves, right? The pan. And he used to, so that was a different kind of pan, which is not like the one we use, each year. It was all exported to Afghanistan and Pakistan. So he used to actually travel there, and a few of our villagers used to travel to Afghanistan and Pakistan, and then he used to get those gold coins, so he was a big trader at that time. So he used to take betel nut and the betel leaves, and that was the main crop in our village. And then since it's a beach town, it's mainly coconuts, then bananas, and betel leaves and betel nuts. Those are the main crops in that entire belt. Everyone, even now, grows the same thing. Even my father today also grows the same thing, because you don't get labor these days. So a crop like coconut or betel nut, it's almost labor free. They live 100 years, the coconut tree, and you just have to, today it's a drip irrigation, so you have water which is pretty automated. And so that's what the farming, and most of my friends are still doing the same thing. They never left the village, because some of them tried getting to Mumbai, but most of them came back, because the life there is much more peaceful.
I can
And
imagine.
taking
I think
the stress.
a smaller town may have challenges, but the pros far outweigh the challenges of so many things.
Absolutely. Yeah, and someone who has never been to those towns, for an extended period of time, they would never realize how peaceful. And I mean, we try to do that in the cities through going through meditation or going through vipassana, but that's the natural way of living, in these, where the life is so simple that you don't get all these complex thoughts. Your mind is not filled with the mind chatter. It's always relaxed, because you're always surrounded by such a peaceful environment. And even, when I came to Mumbai after 10th standard, my parents said, I got to go to Mumbai, because we didn't have really any colleges out there. So I came to Mumbai, and I got into Parle College. But those 2 years were very stressful for me. First of all, I couldn't speak English, because we never spoke English in school. Right? So I wasn't used to speaking. I could write. So it was very stressful. I always had an insecurity, like the students around me, because Parle College, they had some of the brightest students out there. So those 2 years were tough. And I could see why even my father, who came to Mumbai for 11th standard, he could never adjust, and he failed, and then he went back to the village. And a lot of my probably village mates, did the same thing. But somehow, there was some ambition in me. So I survived through those tough 2 years, and I stuck it out.
So I'm going to talk to you about your US, what took you there. But I just want to point out one thing you said about free time, right? I think a lot of people take free time like they look down upon it. But I think anyone who has evolved a little understands that free time is so important, right? Just sitting at your in your library, or sitting in a peaceful place, and just being there. Yeah? Just be aware of yourself and be there. And I think that is so wonderful.
Exactly. I think you hit the nail. After going through the US, where especially in the US, it's all about achievements, targets. you're always running behind something, and at that time when you are trying to achieve something, you really don't think about what are the alternatives, right? But after you achieve, something which you think that, okay, it's enough for me, then these things start, becoming more important. That you realize that after spending so much time in running behind things and achieving, the happiness level hasn't changed. Actually, the stress level has actually gone up, right? So what's the use? I mean, my financial situation during childhood was probably, 0.001% of where I am now. But you realize that the happiness level is probably way lower than that. There has to be a reason for it. And then you realize that the happiness level has nothing to do with the outside world. You always keep on looking for targets in the outside world, to achieve those. And you thought or you think that this is what is going to give me the happiness. But in reality, it's all inside you. And to look inside, you need time for yourself. And that is something that, as you said, we always keep on thinking, then why waste time on that? It's a waste of time. But I think it is one of the most efficient use of time for yourself.
Yeah.
If your end goal is happiness for yourself as well as your family, I think the time that you spend in looking inside is probably going to have the most return on time invested in terms of happiness.
That's so well put. I would remember that. It was wonderful what you said. So what took you to the US?
See, I mean, when I came to Mumbai, I didn't know much about, what I wanted to do. I had zero idea, right? So because I was good at math, physics, those kinds of subjects, so I got into, science, and then decided, okay, engineering is something that I wanted to do. So I, because of the financial situation, I could only get into like the government school. So I got into Sardar Patel College of Engineering. I mean, you couldn't believe that until I was almost close to giving my 12th exam, I did not even know that there was an IIT out there. And then I always felt that, oh, I wish I knew when I was in the 10th that there was something called an IIT. But, I just went on, got into engineering. I got into civil engineering. So, at that time, because I was from the village, that excited me. I thought, you could construct buildings, bridges, and a lot of engineers in the village used to get a lot of, respect and value. So I thought this is great. And so I got into civil engineering. And then after I did my civil engineering, I wasn't sure whether this is what I want to continue, because imagining in dreams of, constructing these beautiful structures and actually doing it is very different, right? So then after my engineering, I joined Mahindra and Mahindra. So, and I was working there, and I was still thinking, what should I do? And fortunately, one of my friends, he was really smart, right? Who used to live pretty close by in Mahim, the Mumbai Mahim. And he was applying for colleges in the US for MBA. And at that time, the process was pretty long. This was in 96, 97. Right? So the process was very long. You had to send a letter that sent me a form to apply. And it used to take 3 weeks to get the form, and then you used to send. So it was a long process. So he had done that planning long back. And after applying wherever he wanted to apply, there were 2 forms left. So one was where I went, which was Washington University in St. Louis. It was one of the top 20 MBA schools at that time. And there was one Ohio State University. So he said, why don't you apply? I already have these forms, and these are pretty good schools. So I started thinking. So I prepared 1 month for my GMAT. I quickly gave that GMAT and then applied for these schools. And it was just pure luck that Washington University ended up giving me a scholarship to do an MBA. So majority of, at least my tuition was paid for. And since I had no better thing to do, I said, let me go. So I took 30,000 rupees of loan from Tata Trust to get me a plane ticket. And that was the first time I ever, sat in a plane. And then for living expenses, one of our doctor, he had his sister out there. So they provided me some loan, for at least settling me out there. pure luck as I was in the US.
Oh, what a story, man. Amazing. Your friend had the forms.
Yeah,
What a
two
coincidence.
forms.
You got in, you didn't have the money, you got the scholarship. You didn't have the
Yeah.
money for the flight, you got it from the Tata Trust. And
Yeah.
over there you had support. Wow.
Yeah.
You must be so
And-
grateful to all these guys.
Yeah, and ironically, my friend never ended up going to the US.
Oh, wow. That's
because he, because he was targeting, the top
really
schools,
top. Okay. Mhm, mhm.
right?
How
And,
did it
he
work?
never-
How does it work with Tata Trust? They just write you a check for the ticket. That's all they do.
That's all. That's all
Wow.
they do, and you got to pay it back. So as soon as I had my first, I paid back the money. So it is completely based on pay. They never call you that we want our money back or anything like that.
Wow.
Yes, I think they took a insurance. I had to buy some insurance, and I had to submit that certificate to them. So once you pay back the money, you get the insurance certificate back.
Wow. Not bad, yeah. Wonderful. And
Yes.
then you did all your MBA, all that over there, and then
Yes.
you came back to Bombay, to India.
No. So see, 97 was the boom time.
Yeah,
.com.
it's just
Right.
starting off.
So
Yes.
yeah, and because this was a university which was giving scholarship, there were few Indians. Couple of them were IITians, and they were so passionate about the stock market. They were like mesmerized by Wall Street and the money they were making. So they were always talking about stocks and trading and hedge funds. And because I was hanging around with them, it interested me. So I decided, let me take all my courses in finance and investing. So that's how I really got interested, because it was .com. Even my US friends, the classmates, they were on the side trading. They were investing in the IPOs. The IPOs were, going up double, triple on listing day. So it was that kind of an environment. It was very difficult to miss out. And since it got me interested, I started taking these classes. I really liked it. So after I completed my MBA in 1999, I actually wasn't sure whether this is what I want to do full time. And it wasn't that easy anyways to get into Wall Street with, 16th rank MBA school. Right. So I took my first job. PwC gave me a signing bonus. And because of my engineering background, they gave me a consulting job. So I was completely happy. So that was my, first job. Because even at that time, I didn't really have clarity on what I wanted to do. It's just that this is something that interested me. I felt, it is good as a hobby. And as soon as I passed out, in 1999, I started investing with the signing bonus that I got. First, I made sure that all the loans were paid off, and then started investing in the
So
market.
did you start investing, or did you start by trading like your friends over there?
Yeah, I mean, it was mostly trading. See, what happened was when I graduated or, completed my MBA, that was sort of the peak of the markets. Markets from there was just downhill. So I never thought that I'm going to be trading, but I invested in a lot of those, .com companies, I2, Cbell, all those Broadcom,
Priceline.com, all of them.
yes, anything and everything that seemed exciting at that time. So at that time, I was so naive that I thought the more positive views that analysts have for a stock, the great, so I used to look which stock has the highest number of buy calls. And, I invested in those, and because the markets were falling, unfortunate part of US is that they gave you so much margin in trading that to recover that loss, you then start using that margin. So you could actually go up to like 6-7 times of your actual principal, and that just accelerates your wipeout. So I started using, because the stocks fell like 30-40%, and that money was humongous compared to my background, right? Even because my father still had loans, and I felt so guilty that when I lost that money, I stopped investing. I mean, because I just couldn't take that pain, that opportunity cost of that, how it would have made difference, to my father and the family was very impactful. And I stopped. I said I need to really learn about trading, and probably because of that loss, it made me very determined that I need to get into this. I really need to learn. And I enrolled myself for the CFX program in 2001. I started reading. That was the real learning. I realized that what I learned in my MBA probably was just a starter course. And I had to. It was a very long journey. And once at least I completed my couple of levels of CFA, and plus read few books in 2003. Around that, I restarted investing, which was a very different journey than that sort of I did what you should not be doing exactly in investing. And good, it was done right at the start.
Yeah, the capital must have been very limited to begin, even though it was large relatively, but for you, so
Yes.
that was your trial by fire, if you will, your baptism into the world of investing.
Exactly.
So do you recollect, was there any TMT stock or ICE stock, whatever they call it, that actually, if you had held on to, if you had for some reason kept some of those shares, maybe the Amazon shares, and forgotten about it, were there any shares like that you really picked out ahead of time, or it was just pure trading, just momentum?
No, it was pure trading, momentum. If you find something more exciting out there where the delta is going to be pretty high, you used to quickly trade. So the stocks that I remember were mostly like T-bill, Sienna, I2, those kind of Salesforce. Probably that is something which is doing pretty well. But most of the stocks don't even they do exist. I mean, even Cisco, those kind of stocks. But most of the stocks don't have they are not trading at the same price at what they. Many of them survived, but by holding them for the last 22 years, would have done nothing for me.
Yeah. And in 2003, you entered the markets again, this time armed with a deeper understanding. And 2003, if I have my history right, was the start of the next bull run. 2003,
Exactly.
4. Yeah.
Exactly. So
but
that
this
was
time you were
good.
better prepared. This time you were better prepared to deal with it.
Right.
And you were still in the US. Still in the US, or you're back?
Yes. No, I was still in the US. So 2003, because I was well prepared, and fortunately the timing was right. And as soon as I started investing, the portfolio started doing really well because the markets were. So I got that confidence, and then I also got the confidence that this is something that I could do full time. So by reading, I got really passionate about it, and I realized that okay, at least I had the basic skill set needed to succeed in this. And because I also was working with PwC, it was consulting, right? So it was more advising a lot of these businesses, mostly manufacturing businesses, on how do you reduce your cost structure, how do you optimize your profitability. So that also gave me a lot of insight because you work with different company every 3 months. So I could work with so many different managements. I could see how they think, what are the issues at the company levels. So that experience of actually seeing businesses, visiting because you worked actually in the factory. You interviewed a lot of people. You tried to figure out what are the issues in each department.
Like
what are the redundant activities.
Research. That's like the ultimate primary research that you got to do effectively.
Exactly. So even though it was completely unrelated to the stock market, it was extremely useful research, experience that I got. And then once I realized, okay, this is what I want to do full time. Of course, it wasn't that easy to just jump into Wall Street. No one is going to take me there, right? So I said, let me take the next best option, which was moving more towards pure finance. So then I moved towards Deloitte in the financial advisory, which was doing pure valuation. So from Chicago, I moved to the Bay Area, and that was a pretty good step, towards stock market, right? So I did that until I came back to India, and coming back to India was always decided, so I knew that this is where I belong. And in 2006, I came back, and since then, mostly then have started doing full-time investment work.
And when you made those investments in 2003, uh, can you talk a little bit about those stocks that you picked? Were these Indian stocks, US stocks? Anything you
These
can share?
were so in terms of stock picking, I always did US stocks. So I didn't even have ability to invest in the Indian stock other than maybe some of those ADRs out there. So what one thing I did was I invested in the Indian ETF. So because I didn't have the ability to invest in or research on Indian stocks, so I did about 25% of my allocation just to the Indian ETF, and the remainder I selected mostly US company based on my fundamental sort of analysis, whichever were available in the US
Any
market.
big winner comes to your mind from that period of your investing?
No, so I think some of the stocks which did well, and at that time, of course, I started investing in the names that I knew pretty well. So, but I mean, the amount was so small that I did invest in Amazon because I liked their model. I thought that was something which was completely changing. So I invested in Amazon. There are a lot of manufacturing companies in there, smaller companies, which probably you wouldn't even know. But mostly it was because of my manufacturing background. Those were the kind of companies that I found investing. I used to read those, the Investors Business Daily, who used to give, so I think it's called the CanSlim sort of method, right? So because I was doing a full-time job and then the work, hours were very long, you didn't really get too much time on researching on a lot of these stocks. You relied a lot on, but at least I know that which are the factors which I need to focus on. So I, based on just more analyzing the factors, I took a call on, okay, these are the stocks that really make sense to me, and these are the stocks that I need to invest.
So we spoke of 99 and the meltdown and your experience. Then you came back to India. You said 2006, 7.
2006. Yeah.
That's on the eve of a massive spike in the markets and a subsequent crash. How did that play out? By then you were a full-time investor. You're tracking everything. How were you placed going into it? And what was your experience like in that phase? What is now called the Great Financial Crisis?
Right. So because of my experience, in 1999 to 2001 period, I had become much more cautious on the losing money. Right. So in 2007, 8, and since I had done valuations for a few years, I had a sense of what are the fair valuations for companies. So one thing which I did was, after I came back, at that time, the times were pretty exciting. I don't even remember which kind of companies I invested in, during that 2006-7 period. I invested very less because I thought I need to only invest once I understand these companies in depth and really well. Because that is one of the big mistakes that you do, is that if you don't, and especially in markets like India, where a lot of these companies do not have the history, a lot of the business models were pretty new, even the booming companies at that time were a lot of infrastructure companies, the real estate kind of companies. And somehow I never, really liked those kind of business models. I thought that, the businesses which are much more cyclical, a lot of these companies do not really have control on the margins that they make. They are more driven by the entire environment around them. Right? Whereas I need to focus on companies which are, which generally drive their own path, right? And because of that, what happened was I ended up sitting a lot on cash during that time period because I took my time.
Great call, eh?
And hence during that period, I had almost 35-40% cash during that time. And then when the markets corrected in 2009, by that time I had gotten some sense of how the Indian markets work, and my first job was, my job in the investment field in India was in a private equity setting. And private equity was booming during that time. So there were, 10 deals that we used to get every month. So you got a chance to evaluate those deals, go meet those companies, do some due diligences on companies where at least you thought there is a potential to invest. And that kind of a groundwork again, was very useful. So from 2006 to 2012, probably I ended up meeting around 400 companies during that time.
Oh, wow.
Just, yeah, because, there were so many, even after the crash, I mean, Indian markets after during the 2009 to 2011 period, again boomed.
Yeah.
So a lot of things, the activity really picked up. So the only change which happened was from 2006 to 2009, I mostly focused on the unlisted side. Whereas from 2009, even at a company level in the private equity, we decided that we need to focus on the listed space. So then we completely changed our focus to listed, because listed was available at probably 1/3 the price of what similar companies you got in the private equity side. So we shifted that, and that was a good change for me. And private equity was a time period when I interacted with few promoters, and a couple of them became friends, and those were sort of my first investors. When I started on my own in 2012.
Wow. So you went through 99, 2000, had that experience. The PwC experience is really, I think, what I'm hearing is giving you an insight which few analysts will ever have, unless they've been in the role where they're behind, working from behind and understanding. And then you, of course, all the 400 companies that you studied, the PE exposure, unlisted. I guess if you want to become a very good investor, you should have a good sense of how the unlisted space is also working, because it's like a fungible valuations feed off each other.
Right.
And so that probably laid a foundation for what you went on to do, because it's pretty unique, right?
Yeah.
A lot of the people
Yes.
I talk to, almost always their first job is related to investing directly, be it stockbroking, be it investing, be it trading. But in your case, it's a little different history, which I think sort of feeds into what you've grown into now, what SageOne has become. I had a chance to read one of your notes, by the way, a couple of years ago, and I was very impressed. It was a 3-page or 4-page note on, I think it was green hydrogen, if I'm not mistaken. And I found it so, it was simple, but yet very impactful, right?
Yes.
So all that research learning has sort of found its way into the structure and the culture that you've built, which is you have to go deep into whatever you do.
Right. Exactly. Because see, I never went through a standard investment professional kind of path. Right. I never worked for a mutual fund or any PMS or anyone, right? So and because of my probably grandfather, I already had that entrepreneurial bug in my mind. And that's where, I mean, you couldn't imagine that when I changed my job from, I was an associate director in the valuation practice, I changed into private equity, I took 70% cut in my salary, because it was a sort of a field change, right? So, and I was completely, happy during that time. And so as you get brainwashed into, building a portfolio the way it has been traditionally done, right? And most of the mutual funds would do it the way that they always keep on benchmarking against an index. And it's all about, creating alpha, whether it's by your sector allocation or your, allocation at an individual stock, right? Whereas I never thought in those terms. For me, it was, I have a decision to make. I can either become a full-time entrepreneur, or I can pick businesses which I like and sort of become, indirect entrepreneur, which the businesses I invest in are the ones that I wish I could have started. So I always thought in those terms. So it was never about sort of benchmarking or all those technical aspects, of investing. I needed to create or build a bunch of great businesses and because of my background, I always thought, I put myself in their shoes, as a promoter's shoes. And wherever I agreed that, okay, the promoter is doing the right thing for the business, I always thought strategically about that. And that's how I picked up and built up the portfolio. It was, not much to do with what CFA taught me.
It was the companies, the businesses you were buying.
It was the companies, the businesses. I always thought in terms of the business. Even now, I think about the same thing. I do not really care what's in the index, and I need to beat the index, and I need to make sure that I need to have some stocks in this industry, that industry. It's very simple. I always just think bottoms up. I think I am running those businesses. Do I agree with what they have? Most of the promoters are well beyond what I could have done in those in their shoes, and I think that they can run these businesses much better than I could do. So because of the entrepreneurial mindset, I think holding great entrepreneurs in my portfolio is what will deliver me this return. And fortunately for me, I myself also become an entrepreneur, because in 2012 I started on my own. Those couple of promoters gave me like 1 crore each, right? And I didn't have much money at that time at all, because I never really, I took a 70% haircut, and my salary never changed during those 5 years, because the private equity, the fund didn't do that well, or we didn't end up investing in too many of those. But it was great, learning for me, and I thought that this is what I want to do full time, and if I want to do this full time, why not do it the way I think it's right to do? And I had done it for myself. At least starting in 2008-9, I started fully investing into the Indian market. And I used that as sort of a preparative period, those 4-5 years. And by 2012, informally, I had advised a couple of those promoters for 3-4 years. They had done pretty well, and I got confidence enough that I can do it, for others. And that's how the journey really started.
So a couple of points I note on what you said. One is that you took a big salary cut to go into a field that appealed to you. And I think all the people who are listening and watching this, I think it's so important to understand that early in your career, you need to make moves which may not sound monetarily wise, but long-term, they're sheer genius, because they help you move on the path which you like and want to be on. Money is a byproduct. It will come sooner or later. I think that is critical. And the second thing I'm saying this is, it is fascinating that when I'm talking to you, you have not mentioned the word valuation even once. You're talking of good businesses, right? And that is so critical. And if I may draw a kind of a parallel, if you will, Buffett understands businesses because he runs businesses. And a lot of his investment decisions, I'm sure, have benefited from that experience of actually running a business and really understanding what goes on, right?
Exactly.
And I think that is so wonderful, and that's so unique. Yeah, and big congrats to you for taking all those tough decisions early on, but they've given you a platform that is so unique.
Yes. I mean, you learn along the way, but I think, see, whatever you learn, you have to make sense of them fundamentally. If someone is telling you that you need to have diversification, you need to understand what are the fundamentals behind diversification, right? If someone is telling you, okay, you need to beat an index, again, you need to understand, why do I need to beat an index? Why can't just I have an independent return expectation? Right? Why do I need to beat an index every month or every quarter or every year?
Just everyone's just following the herd. Yeah.
Correct. So would I do that for myself? Right? And my theory was that I am not going to do something just because I have started a business. I'm not going to follow the herd of beating the index and following the same benchmarks for myself. Right? What was the core for me was, would I do this for myself? If I can do it because generally you take the best decisions, the most efficient decisions, if others are not pressuring you, right? If you are doing it for yourself, independent of others. And I thought that is the right thing to do. Right? So I said, I will, do what I would have done for myself if I just managing my own money. And that has become the core of, what decisions, the portfolio construction, what kind of stocks come into the portfolio. As I said, as you also said that, it is all about the businesses. Valuation is never a starting point. I need to invest in entrepreneurs and in great businesses going forward, right? I can be very flexible on valuation. And because fortunately for me, I had done professional valuation, I had some sense of what a fair valuation meant. So of course, valuation is never one number. Valuation can be a huge range. At one end, it can be undervaluation, or other end, it can be a little bit overvaluation. And beyond that is excess valuation, where you don't want to touch. But that range of valuation can be 20 times multiple or it can be 40 times multiple. Within that range, you do not know what is the right multiple. Right? You just know that, okay, below this is extraordinarily attractive multiple, and beyond this is extraordinarily expensive multiple. So if it's in between, which is a pretty wide range, you just focus on businesses and just avoid businesses which are extraordinarily expensive.
So that's very thought provoking. You set up SageOne in 2014. 12. Okay, 2012. You set up your the business that you run. Let's come back to the next period, the pandemic and the post-pandemic. How has that been for you? How were you placed pre-pandemic, and what went through your mind when the market started to collapse in mid-March 2020? And then what did you do when the turnaround happened? Because I think, if I may, Samit, those days, everyone, at least in a small group of people that I would sort of seek an opinion from, they all were waiting to see what Buffett is going to say. And Buffett very smartly said in March 2020, or someone said on his behalf, that he's not going to be speaking till the 1st of May on the AGM date.
Okay.
You remember that? He went mute.
Yeah.
He did not speak.
Right.
The only person who spoke was Charlie Munger. And he made a comment. He says, it's important to come out at the other end of the crisis with more cash. Basically, he was saying it's more important to survive than to do anything else. What was going through your mind at that phase?
Right. So let me also give you a little bit of background, how I went into so when I started in 2012, it was obviously a great time to, start professional fund management. So from 2012 to 2017 was a golden period. SageOne itself, the funds probably multiplied 6 or 7x during that time. And because we were accumulating businesses, great businesses, high growth businesses, mostly the focus was on the small and mid cap. And, that universe had a great time. So along with that, we fortunately had picked, better businesses within that. So they did very well. Then came 2018-19, which was one of the toughest period for small and mid caps. It wasn't just because of the correction. The correction was, okay, 20-25% is wet. But the problem was the Nifty kept on going up. So the Nifty went up probably further 10%. And here you have your portfolio going down by 20-25%. The divergence was pretty huge. And because that was sort of, as a professional fund manager, that was the first big drawdown that I had seen in the portfolio, right? And, so that was an extremely difficult period for me. In the meantime, between 2014 and 16, for about 3 years, I had 2 more partners that had gotten, and that partnership broke in 2017, exact time when the peak happened. And people also started questioning, is it, so it was all partnership driven and the performance has just tanked. But so it was an extremely difficult period, and a lot of my AUM also went away because the marketing and fundraising was responsible to those 2 partners, and they took away the AUM then. So my AUM shrank probably to 35-40% of what I had. At the same time, I was going through that tough period where there was no explanation why we are underperforming. And then slowly, once we started recovering, the government did that big tax cut, corporate tax cut in September 19, and things started looking pretty well. The businesses that we held, they were pretty good, so they were still delivering. So between 2017 to 2019, their earnings probably had gone up by 70-80%, but the valuations had corrected by more than 50%. So hence the portfolio was still down during that time period. And that forced us to look even deeper into those businesses, whether, those are the businesses that we should be holding because maybe we paid little higher valuation. So we went through a lot of introspection, questioning ourselves. But then the businesses anyway started recovering. So we had almost recovered all the losses before start of the pandemic. and then the clients also started getting a lot of confidence, right? And we started outperforming again, and then hit the pandemic. So at that time, and that was a period which forced me to get more into meditation and spirituality. I mean, I was always a spiritual person, but those 2 tough years, probably taught me more about myself than any of the previous years. So by the time COVID hit, I think I had become much more stronger mentally, right? And I could take the right decision, because I think once you are very stable mentally, you end up taking the right decision. And in equity investments, those tiny decisions that you end up taking, make a lot of difference in terms of not only returns, but the confidence it gives to your clients, right? So by end of February, a lot of this COVID-related discussion started coming in. And then I started, thinking, what is it that I need to do? Right? So by first week of March, I realized that there are too many uncertainties in the market. We do not know how COVID is going to play out. We do not know what kind of action each of the governments are going to take, and what is going to be impact on the economy. So there were too many unknowns. And one thing I had learned is that when there are too many unknowns, it's not worth taking the full risk. So we took a call to raise some cash. Not too much, because after you can never really time the market, but even 20% of cash is good enough. It gives a lot of comfort to yourself as well as to the client. So we took a call that we need to raise. So immediately we raised, by end of the first week of March, we raised that kind of a cash in all the portfolios. And we thought that this is going to play out over the next 3 months or 4 months. We don't know how it's going. So I even wrote a note to my client explaining the thought process, right? But then between, I think, March 10th and March 23rd, markets fell by almost 30%. They just crashed. Yeah. So what I thought is going to happen over the next 3 months or 6 months happened in a matter of a couple of weeks. And then a lot of governments started taking the action of completely shutting down the economy. Even PM Modi came, live, and then he announced a full lockdown. And I thought the market's around 30%. And now at least we have some clarity how COVID is evolving and what is the action that the governments are taking and what is the reflection in the economy. And I thought now there are many known knowns, and the market pricing is reflecting, those risks. So we took a call that now there is no point in, it's worth taking the risk. So between March 25th and the first week of April, we said we just really need to deploy whatever cash we had raised. So we took that call, and then even in that memo I had written why we took that call, and I explained this theory about unknowns time period. When there is too much uncertainty, you need to create some dry powder, and when there are known risks which are factored into the prices, that's when you need to jump into the market, right? Because there is uncertainty, which generally markets tend to extrapolate, and most of the time those kind of scenarios don't play out, and the markets anyways, correct sharply. I mean, 30% is a pretty sharp fall when, especially in the mid and small cap, they had barely recovered, and they're they were 65% down. The small cap index was 65% down from the peak in Jan 2018. Right? So that's how cheap markets had become. And I thought there is no reason why we should wait further, to deploy.
Wow, that's so that you got both the sides of the trade, right? Building cash and going back in.
Wow. Yeah. And it was fortunate. I mean, and it has a lot to do with that. We didn't panic at that time. The brain, the mind was pretty open.
Yeah.
We were not pressurized by the situation, and I think that situation, you end up taking the right decision.
Yeah, I think that cannot be emphasized enough. The point that if you are stable and if you are aware in times of crisis, you can just deal with it in such a far better way. Right. As getting your emotions take control, and that's what happened in the market. The emotions took control. There was a massive sell-off and a massive bounce back. A sensible investor like you could have just played both the sides without doing anything extraordinary, just looking at the facts and acting on it. So,
and I think at such moments it's very important to have that independent thinking, because a lot of times you look for confirmation from outside, whereas by the time you get that confirmation, it will be too late. So if your independent thinking, if your fundamentals are right, when you realize that, I mean, after going through multiple cycles, you get a sense of the fear level in the market, and you generally do not get anything wrong if you invest during that kind of fear level, irrespective of whatever the situation is. When the fear level is too high, and the fear level I had never seen that high anytime in my previous, even during the financial crisis. I mean, the markets were falling 10%, on a daily basis. Even huge HDFC Kotaks were hitting lower circuits, 15%. And that showed you the extent of fear, in the market. And most of the time, almost everything and more gets priced in during such environment.
So, we spoke about dry powder and the need for it when there are unknown unknowns. So one of the other pet themes that we have on the investor hour is to talk asset allocation, broader asset allocation. And the reason is because we believe that in the long run, your overall asset allocation is going to have a disproportionate effect on the wealth you build over time. So one is, of course, your allocation within equity, cash equity, and overall, how much should you do in stocks, how much do you do in property, gold, etc. As an individual, Samit, how do you think of asset allocation when you're planning your finances, your family's future?
Right. See, I am a core equity investor. I do not really understand any other asset class as much as I do understand the equity. And what I think is that a lot of the asset allocation theory has been built by, the US endowment fund experts, right? And endowment funds need liquidity on a yearly basis. And so for them, the volatility in returns is extremely risky, because you need certain amount of fund every year. And if your returns are negative during any year, then it has huge implications on their research projects and the spend that they do. So a lot of the theory which has been built in terms of asset allocation is based on how do you reduce the volatility of your return, even if it compromises on your total returns in the long run, right? Whereas I believe for a rational investor, his focus has to be on asset class, which he understands pretty well. He understands the risks of that. So something which works out for me may not work out for someone else. But if he's confident that this asset class is going to deliver him, say, 17% or 20% compared to some other asset class, which is much lower, his focus has to be in that asset class, and he should be willing to take the volatility. So any money that he would need, like what endowment funds need, if you need that money, say in 5 years or 7 years or 10 years, that money should not be invested in that asset class. But if you are confident enough that in the next 10 years, this is the asset class which is going to deliver me 20% return versus say investing in a bond market, which is going to deliver me 7% return, or investing in real estate, which is going to deliver me 8% return, I don't see any reason why I should be allocating my money into those lower returning asset class. The key is that I should not have any funds needed during that horizon.
So plan your cash, plan your needs, and the rest of it, if you understand the space, the return sort of matches up, that's where you go. That's a very interesting approach to think about it.
Yeah. For myself, I think that I frankly believe that the highest returns will be made in the equity asset class, and especially in the Indian equity asset class. And I also have built expertise in that. I understand the risk. My basic needs are met, for the next, so if I am protected in that sense, plus, I will have an incoming cash flow, which will also take care of my expenses and more. right? Then why should I be investing? So that's where I am completely 100% invested in the two schemes that I have. I do not have investment in properties. I do not have investment in any other asset class. And may not work for anyone, but I feel this is where I can build the most maximum amount of wealth, because it makes a huge difference, right? You generating a 25% return or 26% return, giving you 10x in 10 years, or 100x in 20 years and 1000x in 30 years, versus an asset class which delivers say 7% return, which we will double in 10 years, 4x, and then 8x in 30 years. So 8x versus 1000x is a massive wealth difference. I think it's well worth taking the risk if you understand the risks of that asset class.
And the magic word over there is if you understand the risk.
Right.
If you got a grip on that, you can, you should allocate that way. That kind of makes sense to me. Typically, what I would tell people is, and what the other guests also over time have said, that we're a developing country, so we tend to have risks which are like unknowns, right? In many senses, and therefore, you can always hedge. But just the previous investor, we had Gautam Baid on the as a guest, and he was telling us that you should try and keep 5 years of cash that you need to run your life separate.
Right.
And then that takes away the pressure. That I think he mentioned that one of the biggest reasons people don't make money is because they have to sell their shares to meet a current need.
Exactly.
So keep your 5 years cash and then just do the asset class you really understand. He was talking about equities like you, and he said that works very well for him. And kind of appeals to me too, if you ask me.
Right. No, and I mean, one has to understand the risk. Like in my recent memo, I presented this, right? Equity market returns are extremely concentrated, right? So if you came in during Harshad Mehta peak in 1992, when the valuations were at 10 times price to book for Sensex, even in 2004, the Sensex level was the same. So 12 years you spent making absolutely zero returns. And then 2003 to 2007 was a golden period, where Sensex itself went up by probably 6-7x during that time, But the starting point for Sensex was at 2 times price to book, right? So of course it does make a difference at what level you do enter. And then by 2008, again the Sensex price to book had gone up to 6.5 times. Then if you entered at that point, by 2014, again you had the same levels. For 6 years, equity investor made zero returns during that time. And then again, you had pretty golden period from 2013 to 2017. And, that continues. So, it does make sense in the long run. You should also think about your entry point. I think it's a misconception that, you shouldn't at all try to time the market. In the short run, you cannot time the market. But once you start thinking longer term returns, your starting point makes a lot of difference. Unfortunately, for most general investors, they get the most confidence when everyone around them is so confident about equity markets. And during that time, the valuations are generally at all-time high. So entry point for most investors tend to be way above average. And hence, most of the investors tend to make way below average returns in the equity markets.
You spoke about the potential of returns in stock market vis-a-vis others, and that's why you're focused. So in that connection, let's talk India, right? I know you mentioned just a while back that you're very bottom up in the way you look at businesses. I'm keen to understand from you, how do you see India's prospects? And I'm talking like 5, 10 in decades. Like, how do you see it going? And is that a source of confidence or no confidence in terms of how people should be thinking about investing and growing their wealth?
Right. See, India as a country, one of the strengths of India is the entrepreneurs that India has. Right. So India has, and you don't need all the 1.3 billion population to be entrepreneurial. The numbers which will drive the Indian growth, which will take India forward, will be probably less than 1% of that population, right? And that population we have in plenty, right? And you can see that more and more. I think for the good of India, at least the way India used to work before and now is very different. There is very little inefficient lending which is happening today. So if you look at the period, especially from 2003 to 2008, if your real need was 100, you probably got funding of 150 or 200, and a lot of that excess money was siphoned off. So you could see huge credit growth, but I think it was extremely inefficient credit growth, and we faced the consequences of that when it was cleaned up by 2018 and 19. Right? I think today a lot of those promoters who played with that system, who gained advantage because of this aspect of India, I think those are either non-existent today or they are extremely minor. Right? The ones who are building great businesses are the ones who are frugal, they are competent, and they are very efficient. I think they are some of the best entrepreneurs, businessmen in the world. And I have seen multiple businesses, multiple management, and today when I meet these managements, they are extremely knowledgeable, their ambitions are high, and that is the strength of India, right? And so one other strong thing for India is corporate India is extremely deleveraged. So they have such a huge leeway for growth going forward. So whenever the opportunity arises, I think they have such a huge balance sheet, leeway to leverage more. Today, the debt to equity ratio, generally people do talk about the overall debt to equity ratio, which is probably at 0.4 or 0.45. But actually, if you look at the median debt to equity ratio is at 0.15. That means most of the companies, so median debt to equity ratio of the top 1,000 companies in India is at 0.15. That means, and that is the lowest level India has ever seen. And that is because of the efficiency of these promoters, that they have been able to grow and they have expanded capacity multiple times without increase in their loan book. Even previously, our entrepreneurs never needed these kind of loans. But unfortunately, the goal was completely different. It was making money for themselves. I think most of these promoters have realized that by taking away 1 rupee from your company, your valuation drops by
Only $5.
60, 70, 80%. Right?
Yeah.
So it doesn't make sense even monetarily for them. And that's a lesson which they have learned. And once you damage your reputation once, it will stay with you for your life. Right? So I think the promoters who have left, who they understand, this commercial or viability, and they are focusing on that. And I am very positive on the entrepreneurial spirit of India. Many of the second generation have been educated in the best institutions in the world. They are coming back. The smartest of the brains are coming back to India, and we don't need too many of them. Probably even if we have few lakhs of those, they can propel India to a very different level. And fortunately for us, the government since September 19 has taken the right action. The best action I thought was the game changing for India was cutting that corporate tax rate, which has made India one of the most efficient or lowest taxed countries. And with the kind of frugal promoters that we have, now they can really compete with the world. And the opportunity for us is China, because China has done extremely well. They are the lowest cost producer, but it's because of the incentives and the support by the government. Right? So how long can China keep on raising its debt level and funding the low cost of manufacturing? I think it's about time. Many of those companies probably will go bankrupt without the support, and the government will have to sort of take away the ventilator, from them. And that is an opportunity for India. And hence I believe if this combination stays of the entrepreneurs, of the government, and the way things are, in our main competitor, which is China, and also some manufacturing in Europe, if India takes the right steps, it's going to be the best probably couple of decades for India.
Yeah, I agree with everything you said. I think things have changed rather dramatically, though I think as Indians, we're always optimistic, right? We fought in 91, the world has changed. And what we are getting is in spurts, we have changes and then a long period of stagnation.
Right.
In recent, I guess, a decade or a little bit here or there, there has been persistent taking steps, going forward. But typical of India, because a large country, diverse opinion, some steps are half back, rolled back, etc. But
Right.
overall, I think it's just becoming far more predictable that we are moving in the right direction, and we can see that with every passing day. And I always tell people that the one person who doesn't get enough credit for a lot of this is Nandan Nilekani. A lot of this that we are benefiting from is linked to that Aadhaar thing that he built.
Absolutely.
And it works so perfectly, right? All your lending, you can't, the PAN card, the deduping, the direct benefits.
I mean, the data analytics has gone to a completely different level because of the availability of data. The data collection is all linked to the Aadhaar card. And
I'm very, very bullish on India in that sense. I think, and I completely share your view, and I like the way you put it. And the key thing is that we should stay on this path. A lot of the emerging market countries, if you look at BRICS, right? Brazil has gone through, I think, maybe bankruptcies. They've had a currency which has got hammered. Russia is Russia.
Right.
And China is imploding. So one of the things that I'm seeing is in the Indian media, when we talk of China, we talk of it from a geopolitical perspective. But if the Indian media was to cover what's happening from an economic perspective within China, it's outright scary.
It is absolutely.
It's so scary what's been happening over there in the last couple of years. And they can put a lid on it as long as they want to, but the businesses will shift.
I mean, if you hear some of the free sort of reporters who are reporting what's happening at the ground level in Beijing, or it is scary. I mean, if that was happening in India, I mean, I would be depressed, so, and that will open up all reduce the competition hugely for India, because it was an unfair competition that, it was similar to a promoter, getting 1.5x or 2x of funding, and he didn't care about the price at which, he was selling the product and
they were dumping. Right? They were dumping.
They're dumping. Right. Because they made their money. Their business running was not for making their own money going forward, or for the investors. Right. So that was the case in China. I think the way those kind of promoters, went through a tough phase and vanished, I think similar thing can happen to a lot of these Chinese companies. And I think it's fair for the world. I think
sooner or later you have to pay the bill. You can't kick it down the road permanently. And I think India, the way India is trying to do this with the production-linked incentive scheme is a little bit more smarter. There's a clear horizon of how much you will get over what time period you get. They're not like unlimited. You build any business and we'll just get the market share, and and we'll help you out.
Right. And even in the PLI scheme, you got to set up your price. You got to commit to certain volume. And only if you deliver on that, if you execute on that, you will get. It's not like, the wind farms that you just put up a wind farm and you will get, accelerated depreciation of, 150%, all of that, which was government paying more than what was invested. Didn't make sense. Whereas this is only get paid if you are delivering on your commitment. And even for that commitment, there is competition. Not everyone who applies for the PLI scheme gets it. The most efficient player is the only one who gets approval.
Right? So it's such a right way to do it, to make it competitive. Perfect.
Exactly.
Pivoting, sorry, excuse me. Pivoting a little, Samit.
Yes.
Talk to me about selling a stock. I think one of the biggest reasons people don't make money is because they hold on to their losers, right? I've asked this question in our previous investor hours, and I've got fascinating responses of how people should think about selling and make it an easier process. Have you been through that experience where you own a stock you really believe in and it's refusing to do anything? And how did you deal with that, and how are you taking care of that bias?
Right. No, I mean, see, that is sort of a rookie mistake that most investors end up making. The rookie mistake is that the stock which falls the more, you end up, having to buy more and more because
Averaging down. You keep averaging down.
You keep averaging down because you think you got to make the money in the same stock. And if I book losses, that's a failure on my and that is a mistake that I learned early in my career, that it's never about the price. It's all about the business, right? There is a reason why prices go down, right? And fortunately, as a fund manager, for a PMS fund manager, you keep on getting money every day, right? So for me, every day is a new day, right? I got to think whether if I have to rebuild my portfolio, which are the stocks which will come into this portfolio without any overhang of whether I bought a stock at X and today it's at half X or whether it's at 5X, right? So that discipline that I put, as a process, that stock which I am confident of buying today are the only ones I should have in the portfolio. If the stock has gone up, say 5X, and for a new investor, I feel uncomfortable buying it, why should I have it in my own portfolio, right? Because my job is to think about a portfolio which is the most optimal portfolio going forward, right? So irrespective of whether the investor is 5-year-old or investor is 0-year-old, why should that stock portfolio be different? Right? Because that's a question, and that's a very different approach that every even fund manager follows, especially PMS. A mutual fund is just one fund, but PMS, it's individual portfolios at and there are PMSs who completely have customized portfolio depending on the time of entry of that portfolio. I think that is giving bias to the entry points of the portfolio, right? Why should I be having a different portfolio if I think that this is the most optimal portfolio going forward next 3 years, right? So this is the fundamental based on which we take a decision of exiting or buying more. If we think that the business hasn't changed and the price has fallen because maybe in India, it is very normal that an investor or a mutual fund wants to get out and the price falls by 30% or 40%. If you know the reason, okay, this is a specific reason, it is going to end, then that's a great time for you to add on. But sometimes, you don't know what the reason is. There are many smarter investors who know the real reason, and the stock keeps on going down because the business itself is, deteriorating, right? And if that's the case, for you, it's better that you just get out. You made a mistake.
Cut your losses. Yeah.
Cut your losses. So most often I will never average down. I would if I think, okay, even it makes sense, the business has come down a bit, but it still makes sense for me to hold it for the next 5 years. There are tough periods, and so I will keep my allocation. So if I start my allocation say at 4%, because the stock has gone down by 50%, probably allocation has gone down to 2%. So now the risk itself has overall, gone down. And if I get a pivot that, okay, this is the time to, add back, at that time, I'll probably, instead of going just back to 4%, I can go even back to 6%. And I've done it multiple times. So I can triple my position, at probably, 60% lower price. But there has to be a pivot. And I don't need to be early in the game. Let things turn around. Even if it goes up by 10, 15% more, I'm fine. But, I need to get that confidence about the business. And then I can, add back completely. But when it's going down, it's like, I don't want to catch the falling knife. And it doesn't even, make sense.
Great. That's very helpful. A quick word on investing in times of war and inflation. We are in between both.
Right. See, I think we are in a world where there are going to be some fears, some issues all the time. Sometimes it's going to be some war somewhere, sometimes it's going to be, we have had a war somewhere, sometimes it gets into the media much more than, not if there are some prominent companies like Russia, but those things are going to be constant, whether it's inflation, some kind of a recession fear, some kind of a meltdown, financial issues, war. They are going to change the name. The risk is going to change the name. But one has to operate in those environment. I think those kind of fearful environment is what gives you the prices, which are attractive, right? So I never thought that India really deserved the fall, when it went through in the first half of this year, because for India, 7%, 8% inflation is pretty normal. Our salary increases are on an average at least 10%, right? So when your income is going above by at least 10%, at a overall BSE 500 level, the increase in salaries over the last 10 years has been 13%, right? So even if I assume that, okay, some part of it is going to be because of the increase in the workforce, but still 10% is going to be an average growth. So for 10% growth, 7% inflation is really not worryful, right? And in US, where the salary increases are going to be in 2 to 3% range, their 8-9% kind of inflation really has a huge impact on the consumption or the thought process of the consumer, right? So India, and again, it's the macro things are always good to know. It's all about how you put your company in that environment, whether your company is going to be disrupted, whether they will face any issues because of those risks that are probably prevailing in the world today. And that evaluation is a constant evaluation that one needs to do, because the risk which will be emerging will be very different. And if you think that your business is going to be impacted by some of those risks, then your evaluation of that business may not be right, because then it is dependent on many things. Its success is not in all kinds of environment, whereas your goal has to be picking a business. What is the moat of a business, or what is the competitive advantage of a business? This kind of how it would react to the risk is very important when you evaluate the competitive advantages of a business. And you need to get to a portfolio where, whether it's a war, whether it's an inflation, it's just a temporary blip, and the company can adjust to it and move on. That is what is the real competitive advantage, and that's how we evaluate. Macro wise, there are very few situations like what happened in COVID, where we will take a macro call, because there are too many unknowns. Today, the war scenario or the inflation is so talked about, that mostly it falls under the known. And it just does get priced in. So you don't really need to take any action. You just need to focus on your individual businesses and evaluate whether they can withstand in that environment.
Okay, my last 3 questions for you.
Please.
So you're married.
Yeah.
There was a pandemic. Your wife couldn't go out a lot. You guys couldn't go out a lot on holidays and all. So your wife comes to you and says, "Hey Samit, I saved up 1 crore of rupees in these last 2.5 years." And she says, "Okay, now tell me what I should do with it." What would you tell her?
Right. See, my natural first instinct is to invest into the market. Because whatever you need for your normal life, generally is already taken care of, on the side. So any excess money that you typically gets invested into the stock market. Because fortunately for us, my in-laws live in the same sort of building on the ground floor, and even they keep on getting some excess money, and they are pretty aged. Even for them, I keep on advising that this is the best thing to do if you really don't have a use of it. I don't believe in that you should compromise in your standard of living, and that money you got to invest, because investment is not about just return. The end goal has to be, how do you make your life where you yourself are happy, your family
financially
is
free, living well.
Yeah, because freedom is what will make you happy. You tend to think that by making more and more money, you will become free. But unfortunately, it acts the other way around. The more money you have, the more insecurity sometimes you get, the more stress you get, and actually you become less free. So one has to be conscious that the goal has to be, how do you make yourself completely free of any pressure from anyone. So first I will think of a way, if that crore is going to use, it has certain use to make our life even more freer, I would do that. And I think, as money, there are too many people around us who need money much more. So I keep on telling, like, if there is any need which you think is genuine, your first thought has to be for that person, or so it's money that you are making because of everyone around you, right? It is not your wealth. I have told my kids that I can support you for your education, but then you got to make your own career. You cannot depend on the wealth that we have created. This wealth that has been created is for rest of India. It has to be India is in a great need, right? A lot of people are in, I think the biggest problem for India is the gap between the haves and the have-nots, and that gap has gone up. And it is not just the government's responsibility to take care of that. I think each individual who is well-to-do, I think he has to take that as his own responsibility and not just wait for the government to do it. So whatever way you can help elevate the level of anyone who is below you, I think that's where your money has to be spent.
That's so nice. I'd love to hear that, what you do and how you think about this. Thank you for sharing that. You mentioned children. My second question was going to be, how are you teaching your children about investing? Are they? I don't know how old they are. So.
Right. No, my daughter is in college. She is in the second year NID Ahmedabad. So she is on the design side, and she has zero interest in investment.
Dad is doing boring stuff, huh?
Dad is doing boring stuff. She doesn't even know what dad is doing. She is completely focused on her art and her design, and fortunately for her, she at least could get into something where she is doing that 100% of the time. Yeah. My son, we do have conversations. I told him that the only way you can learn about investment is by doing it yourself, right? So I even opened up a Zerodha account for him. I have funded him 1 lakh rupees, but so far he has done nothing about it.
He's probably inherited in your caution in the later stages of life. He's probably doing all the research in his head right now.
Right. So he's in the 11th standard, but his interests today are very different. It's more about his friend circle and hanging out with them and doing a lot of other exciting things than this. I even told him, even if you want to get into crypto, if it excites you, just learn about it, right? But so far, not been there. And we are not the parents who are going to force the kids to do it. I think they will have to find their own path. Because there is no right and there is no right and wrong in any path or in any career that they choose. It's more important that you at least figure out what is your passion, whether it makes money for you or not. I think money will come later on, but it's important that you guide your kids to at least find their passion and support them in that passion, irrespective of what your perception is about that career. So that's what we try to do, but unfortunately, so far my son hasn't found any direction yet.
Okay, my last question. So Buffett famously doesn't sit near Wall Street, right? He's far away in Omaha, Nebraska. You are relatively far away from Bombay, where all the stock market activities. You are in Pune. So why, I'm going to ask you why Pune, and then I'm also going to say that, did your PwC experience working with manufacturing companies and all have a role to play, that you like that kind of an environment? Because Pune is all about manufacturing and engineering and all that, right?
It is. Yes. No, it wasn't really a really planned or thought out decision. It's that when we came back to Mumbai in 2006, we used to live in Kalanagar, Bandra East, and my job was in Nariman Point. And at that time, there was no C-Link or any of that, So it used to take me 1.5 hours to one way, so 3 hours waste of time. There was no Ola, Uber, or any AC taxi. It was all Kalipili. And I thought it was very frustrating, spending 3 hours a day without, you can't even read. You're just sitting in pollution, stuck in traffic. And fortunately for us, a couple of our friends had moved back to Pune from US. And we, for the first time, I never visited Pune before then. We, went there to hang out for a weekend, a couple of times. And we really liked it. It was green, much peaceful, away from noise, not much of, traffic.
Vibrant.
Much better weather, and this, the Koregaon Park area, all of that. We really liked, and then we took a decision. A lot of those decisions we have taken, at the spur of the moment, and we moved here because it made sense. That good schooling, and for me, I am not that social a person that I, hang out with a lot of investors, or I talk a lot about stocks.
You're one of those guys who says, okay, I have free time, let me stretch my legs and read an annual report. Huh?
Yeah, or do meditation or something like that. I would rather avoid any social gathering, or that's how I am, and it works out well for me. At least it gives me non-bias. I have my independent thinking. If you hang out, like when I go for a conference, there itself you get bombarded with so many ideas, and then once you hear those ideas, you get biased, and then you keep on focusing. If these guys liking, it must be good, and generally it is part of the herd, because they're not just talking to me, they're also talking to 100 different other people, and then the circle is so small that everyone knows about those same ideas, and typically you end up becoming part of that herd. And in a herd, you'll never get the great valuations, or
you'll get the average. You'll get what everyone's
You'll get the average. Yeah, everyone is getting. So by staying away, at least here you get your peace of mind. I don't waste much of time. Between back and forth, I waste 40 minutes of my time, and that too peaceful, drive through the greenery, and I get to focus on what we all really enjoy and keep me happy. Without having to forcefully do things for the sake of it.
Then I'm so happy for all the success you've had and the decisions you've made. Samit, it was wonderful talking to you, and very thought-provoking. I loved the ideas you've shared. And I'm just so glad that we finally got to chat to each other on the investor area.
No, it is my absolute pleasure. I thought it was going to be a lot of, what sectors you like, or what stocks, which gets covered all over the place. This was a very pleasant interview. Thank you for that.
Thank you, Samit.